Splendid evening, it is to viewers. Welcome to Equity News on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from the Hampton Studios. I'm Ibn Mapunda. Let's get started. The World Food Program says over 5.5 million people in Zimbabwe living in the rural areas are in need of food aid. The WFP also said that the 2018-19 agricultural season was the worst in over 3 decades. While the figure issued by the WFP is a higher figure than the one stated by the FuseNet, which stated that 5.2 million people in the rural areas are actually in food aid. Meanwhile, NMB Holdings has reported a 533% increase in profit before tax of $74.5 million for the half year ended 30 June 2019. This is according to the financials released by the entity at an analyst briefing held in the capital yesterday. Our Equity Access team was on the ground. Let's have a look.
The operating environment was indeed challenging during the first 6 months of the year. Businesses were faced with acute electricity challenges, as you will be aware, and fuel remained in short supply. Inflation, which had largely been contained during the time when we were using the multi-currency system, increased very significantly, closing the half year at 176%. The authorities introduced a very tight liquidity regime during the first 6 months. I think we all know the reasons, but having said that, it did affect businesses in that it became extremely difficult for businesses to access credit, and when they did, the credit came at a cost. We saw the introduction of the interbank foreign exchange market. The initial trades of the US dollar to the Zim dollar were at 1.25 before sliding down to 1 to 7 by the end of the first half. During the period under review, we largely concentrated on trying to increase our non-funded income. The way we did it, we were very aggressive when it came to opening new accounts, in particular the NMB Light account, which has been very well received in the market. I'm pleased to advise the group recorded a comprehensive income of 61.4 million for the half year. This compares 9.1 million as at the 30th of June 2018. Therefore, the group's basic earnings per share increased from 2.34 as at 30th of June 2018 to 14.55 cents for the period ended 30th of June 2019. The basic earnings were largely driven by the continued expansion into the broader market segments, revision of lending rates and charges at the tail end of the half year, reduction in NPLs, again cost containment measures, and functional currency changes and fair value gains from investment property.
As the reporting galore continues, TURNALL reports revenue of $25 million for the half year ended 30 June 2019. Sales volumes were low owing to depressed demand as macroeconomic forces begin to unfold. They also reported a profit of $25 million during the period under review and are looking to expand their sales footprint into South Africa and Mozambique as a means of generating the much needed foreign currency. Our Equity Access team was on the ground and we had an exclusive with the finance director. Let's have a look. $1 million as well as revenues of $25 million. Just in a nutshell, what were the major drivers of such a positive performance?
Okay, thank you. I think our performance during this period, it was driven by, you see, unfortunately our volumes were a bit down compared to last year, but we've been able to maintain the value of our product in the market in terms of pricing. So we've been able to achieve that, as well as containing costs in this, even though under these difficult circumstances.
I realize. Now, what can you attribute to the decrease in terms of the debt gearing ratio in that regard?
Okay, the decrease in debt gearing is a result of the profitability for the business and the cash generation that we have been doing. This has allowed us to repay some of the debt as well as increase equity through profitability. That's why the debt gearing ratio has come down.
Fantastic. Now to talk about what you alluded to during the presentation, you mentioned Mozambique, you mentioned South Africa. Is that the strategy of the entity going forward? If so, what has been the reception of your products up to this point?
Okay, yes, our strategy is now to go into the export market, considering that we import and we need to the foreign currency. So we've gone into Mozambique and South Africa. In Mozambique, the response has been very good, and we have not been able to supply orders, particularly in the first half when we went there. We have had to come back and try and re-strategize and find out how to quickly get our raw materials, as these are imported and they take a lead time of up to 3 months. So right now we've got our logistics in place, and we should be able to supply that market.
So you're confident that you will be able to service the market as required?
Yes, we will be able to.
I realize. Well, thank you so much for the time, as well as good. Also, on a reporting tip, ProPlastic reports an 87% growth in revenue to 20 million Zimbabwean dollars for the half year ended 30 June 2019. They also, of course, did report a significant jump in terms of their profit after tax, coming in at 5.4 million Zimbabwean dollars against a prior year's performance of $1.4 million. Also, beyond our borders, JSE listed mining corporation IMPLATS reports a 36% increase in their revenue to 3.2 billion United States dollars, bolstered by strengthening prices of PGMs as well as increased sales volumes. In the same bracket, the entity was able to rebound in terms of their profit position, reporting a profit of 202 million United States dollars for the period in question, swinging back from a net loss position reported in the comparative period the previous year. Now, this concludes our evening news bulletin. Up next is a look at the stock markets in Markets Daily. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives the diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities including banking, short and long-term, asset management, and property editor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Welcome back to Markets Daily. A bloodbath across the stock markets, with the all share index losing 1.04%. The industrials index also shedding just by a margin 1.06%. The minings index has remained on its constant trajectory, while the ZSE top 10 lost 1.29%. Well, of course, interesting trend there that we've actually seen developing, with the Econet group losing minus 3.10%, Delta 1.20%, Cassava minus 2.44%. Interesting where Econet and Cassava are concerned. Well, of course, they did launch Sasai as well as the mobile bureau de change. Of course, Cassava being an offshoot of Econet, and now we also have learned of Net1's launch of their own mobile bureau de change in that regard. IMSCO also shedding minus 1.11%. Essentially, pretty 7 counters in the top 10 have had a bloodbath during the course of the trading session, while Seedcorp BAT remained constant. The only gainer in the top 10 was Old Mutual, which gained 1.54%. Now on to our rises of the day. Ariston, that exporting concern, did gain 10.28% to a price of 6.01 cents. Old Mutual also in the same brackets gaining 1.54%. Of interest there would be the fungibility, of course, of the Old Mutual stock, and of course a bit of positive results from the Old Mutual group. This also comes in ahead of their results that are set to be published on the 12th of September, which is next week. Our losers of the day, Mikos shedding 6.67%. Of course, there is that issue there of the disposal of the flagship building in the capital, Mikos Hotel, to a Dubai-owned entity. This is subject to approval by the shareholders of the entity. TSL also shedding a negative 5.08% story there with TSL. Issues to do with tobacco. The volumes have been up, but the pricing has been that much of a concern. And in terms of the outlook, there could be concerns there to do with the ability of the miners, of the producers, who are the farmers, to actually regain the ability to come back onto the agricultural season and farm again for the next season. Now, ladies and gentlemen, this concludes our evening news bulletin as well as our stock markets. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website www.equityaccess.net. From the Equity Access team and I, Danke and Sante Sana.